Hello and welcome back to the channel. The topic that we are going to discuss today is the aspects of taxation related to cryptocurrencies. The budget of 2022 has announced that cryptocurrencies will be taxed at the rate of 30%. However, most people are not aware that the proposed 30% tax is imposed on virtual digital assets, which include assets other than just cryptocurrencies. This piece of information attempts to shed some light on the scope of virtual digital assets and the taxes that will be imposed on the income generated from such assets. Before we look into the proposed amendments related to the taxation of virtual digital assets, let us first understand the meaning and scope of virtual digital assets. In simple words, the scope of virtual digital assets include cryptocurrencies, non-fungible tokens or popularly known as NFTs, and other such assets backed on blockchain technology. However, what virtual digital assets do not include is central bank digital currency, digital gold, and any other traditional digital assets. It must be kept in mind the announcements made by the finance minister are mainly targeted at taxing cryptocurrencies. Let us now understand how are virtual digital assets defined according to the Finance Bill of 2022. The Finance Bill of 2022 has defined virtual digital assets in the following manner. Any code or information or token which is not an Indian currency or foreign currency and generated through cryptographic means or by any other means by whatever name called, but providing a digital representation of the value exchanged with or without consideration. It involves a promise or representation of having an inherent value. It may function as a store of value or a unit of account, including its use in any financial transaction or investment, but it is not limited to investment scheme and can be transferred, stored, or traded electronically. A non-fungible token or any other similar token by whatever name called, and any other digital asset which has been specifically notified by the central government in its official gazette. Now let us understand the budget highlights regarding taxes on virtual digital assets. Following are the changes that have been brought about on taxing the income generated from virtual digital assets. Income made from the virtual digital assets shall be taxed flatly at the rate of 30%. There are no deductions except the cost of acquiring them, and there is no provision to set off the tax liability against any other income. Transfer of virtual digital assets in the form of gift shall be taxed at the hands of the recipient. A proposal has also been made to put in place TDS at the rate of 1% so that the government can keep a track on the transactions made using such assets. An announcement has also been made by the government to introduce digital rupee, which will be based on blockchain technology and other such technologies. This currency shall be issued by the RBI this year itself. The step of imposing TDS on every transaction has been seen from the market players as a way of tracking movement of money, since there have been concerns about the transactions taking place for unlawful purposes. This also imposes an obligation on the market players to deduct the TDS and report the same to the government. The government is of the view that the usage of virtual digital currency will lead to more efficient and cheaper currency management system. For more such updates, please like, share and subscribe to the channel. Thank you.